Hi, so I welcome you all to the marathon for CMADD, that is your compliance management audit and due diligence. Now, let me tell you that the marathon will be covered in two parts, that is, today is day one and tomorrow will be day two. Okay, first of all, thank you so much everyone for being patient. Keep your modules ready. I will be taking you all through a very in-depth and a fast-paced revision of your entire chapter, including telling you what all is important from exam point of view. So good to go. Can I have GTG in the chat box? Great. Okay, great. So now we begin with the CMADD marathon. The marathon is going to be in two parts. That is, today will be the part A. Now in this today's marathon, what all I will be covering. So your 60 marks, okay, where if you can score, you can independently pass on basis of this part only. And you should start your revision, studies, revision even before the exams from your part B only. The eighth one, chapter 8, is a summary of all other chapters. So you should really literally start from chapter number 9. You go in order, chapter number 9 till the very end is your related to audit. What does it talk about? Audit. So you should start from your chapter number 9, 10, 11, 12, 13, 14, 15. This I would say is the first phase of your portion completion. Second is your due diligence. Okay, that is DD is your part 2. Now lesson number 8 to 15 are all correlated. You can complete them all in order, and when you finish one, the next one is a reference of the first one. Due diligence is a completely new topic, and this will be the topic for today's marathon. Okay, now I will be covering from exam point of view so that you get a proper in-depth knowledge from exam perspective. Now when we start, we'll be starting with chapter number 9, that is your audit engagement. Now if I ask you a question that who issues accounting standards, so you will say ICAI. Now auditing standards, that is for audit, even your ICSI has also issued certain standards which you should mandatorily quote in the exam. That is your company secretary auditing standards. A total of 4 auditing standards have been given which is mandatory to be quoted in the exam, and it is given in a very logical way where you can remember as well. The very first one is when a company is engaging with an auditor, they have a contract that is called as audit engagement. What it is called? Audit engagement. So when you start with the engagement, that is a appointment letter, everything about an appointment letter is given in CSAS 1. Now after that, then comes the entire process of audit. How is audit done? How are companies audited? How is evidence collected? All those aspects is covered in your, so this is your audit engagement. Directly then we will come to your audit process. The audit process is covered in your CSAS 2. What it is covered under? CSAS 2. And then in that process it is written how evidence is collected, how is it different ways of saying whether a company has complied with the law or no. So obviously there are certain checks, certain internal audits. We will see sampling, your verification, all those different methods of collection of evidence will be given in your part 2. In your part 3 is after you have determined that, listen, I have, the auditor has determined that he wants to give an opinion whether the company is good, bad, or he cannot give his opinion. That opinion will be covered in your CSAS 3, in CSAS 3. And why are they teaching us all this? Because all the auditing principles even a company secretary need to know, because we are also auditors. Okay, we are secretarial auditors. So as per section 204, obviously this is what we need to know. Section 204, in that you also need to know your rule number 9. In that you also need to know your SEBI LODR 24A. okay, and your MR3. So these are some important key pointers that you need to write, which is about secretarial audit. Here, so these are your 4 audits that we will be covering in order. Okay, right? Engagement, then we'll be doing process, then we'll be doing the opinions, various kind of opinions we can issue, and then we will be doing your secretarial audit. Is the concept clear? Yes or no? So now we'll begin with your lesson number 9. We will be starting with lesson 9, your audit engagement. Sir, what is the meaning of the term engagement? So what is engagement? No. So engagement is basically a offer letter. It is nothing but a offer letter. So what do you mean by that? A offer letter means when the company, okay, is hiring a auditor, they enter into a offer letter. That offer letter is called as audit engagement. So everything that an offer letter would contain, it's obviously a contract. All those things you will see here. So the auditor is the person who's going to check, could be a company secretary, could be a chartered accountant, could be a cost and management accountant. That is an auditor. The on whom the audit is being done is called as the auditee. So what does the audit engagement cover? It covers the terms and conditions, simple terms and conditions of the audit. Now I am asking you, what all terms and conditions are going to be covered? According to you, what all terms and conditions will be there? So very simple. The first thing is about money. How much money will be there? What is which type of audit is going to be done? That is called the scope of audit. Which all entities are to be audited? Which all departments are to be audited? The time frame. Who will be the audit team? How much manpower is required? All of that will be covered in the audit engagement. Concept clear? Yes or no? So CSAS 1 is about standards of auditing. Sir, very first one is the meaning. Sir, meaning of audit engagement. Audit engagement is a contract between the auditor and the auditee with respect to the terms of auditing. Okay. So it is nothing but a between the auditor and the auditee and containing the terms of audit. So the concept I will explain, which you can write in your own words, but wherever there is a keywords that I need to know. Like for example, you say now I have understood, but do you know that you need to know from the CS Act Schedule 1 Clause 8 in this chapter. So let me take you through. So all this is very simple. Okay, you can hire through tendering, etc. Now I want to take you through one important clause, which I wanted to write in the very beginning only. Okay, beginning of the chapter only, because this is what you need to write here. This is it. You have to mandatorily quote the CS Act 1980. Sir, what is CS Act? Company Secretary Act 1980. In that you have to mention your let me come to it. Okay, why am I taking you now only through it? Because that comes in the exam. Okay, so this is where I want you to. So as per CS Act clause 8 of Schedule 1 states that it is the mandatory requirement of a company secretary when he is entering in as an auditor to do a secretarial audit. It is his mandatory duty to contact the incumbent, the previous auditor. And my question is, and even in the exam they have asked, do I need to take a NOC from the previous guy that listen, I'm coming in, give me a NOC, then I will enter? Is NOC to be taken from the previous auditor? For example, I am coming to do an audit. Now, before me, who was the auditor, it is my duty, mandatory for me to connect with him. I don't need his NOC. I simply need to inform him that I am the new auditor that is there. So this is mandatory for every company secretary before accepting. Now see, understand also, before accepting any assignment, to communicate to the previous incumbent, to the previous guy in terms of clause 8, part 1, schedule 1 of CSI. Whenever you're doing a annual return, all this annual return under section 92 we sign. Okay, secretarial audit report is to be done. Your as I told you, regulation 24A of SEBI LODR. So any of these things that we are doing, certification, it is our duty, internal audit. It is our duty to write a letter to the previous guy and intimate him, and see the letter also how it is written. Dear sir or madam, I so and so company secretary have been approached by the management of XYZ company to do the audit. We understand that the earlier above mentioned professional services were rendered by you. So this audit was done by you, and we kindly request you to kindly take this communication as an intimation to given to the previous incumbent in terms of clause 8. Clear? Yes, sir. Very, very simple. I don't need to take their consent. I'm simply informing them. Very, very important to know. Now, moving forward. So, I hope you've written that schedule 1, clause 8. Okay, clause 9 will also come, but let's see. But that this is very, very important. Now, once we do this, then I want you to understand that under which section are we appointed. Obviously, secretarial audit is there, but we can be appointed for internal audit also. So, appointment of auditor is under section 141. Okay. Now, your auditor by a company could be a chartered accountant. So, under section 141, the appointment is given. He needs to complete the conditions given. Now, company, how do they appoint auditors? Either directly they contact, which is very rare. Okay, by taking a list of all the auditors and telling them a offer letter. It can happen reverse also. The auditors can write a letters to the company saying that we by introducing their business to the company and telling that we give auditing services, hire us. So either of them could be given. Willingness, consent will be given. Pre-engagement meeting will be done. They will decide conflict of interest check. Did you know this? That whenever a company hires an auditor, a conflict of interest will be done, because see, we will see that you shouldn't have substantial interest. Now, substantial interest, again we need to know under the below point, that is also very, very important. Substantial interest or conflict of interest, when it will come. So how much shares are allowed, how much relatives they are holding is there. So that we will come. Market is important. That is also important from exam point of view. Conflict checked is important, and then the signing will happen. Very simple. If I'm appointing an auditor through a tender process, same thing that goes on, but we will take only this much part will be new, that we will issue the bids, accept the submissions, and then we will have a pre-audition, the pre-engagement meetings, etc. Now always a auditor should accept the audit engagement, or he can reject also. If a company has approached that I want PwC to do my audit, or I want XYZ firm to do my audit, will the firm ever deny? The answer is mostly so. It's a business, right? You would accept it. But when you should reject the audit, when you as an auditor should reject, whenever there's a conflict of interest, okay, conflict of interest, if it doesn't match your technical skills. So for example, industry specific, if a crypto company has come and you've never audited and you feel that you don't have the manpower, the skill sets, in spite of being a CS or CA, it is possible that I don't have that industry level expertise. Okay, a company dealing in space technology has come. I don't have any knowledge, so I should reject ideally. Okay, or whenever there's an unusual risk involved. So maybe some companies, maybe a gambling company, I don't want to take Dream 11 because there is too much of risk involved, right? So in this case, you should consider rejecting. Now coming to who is the appointing authorities of an auditor. Who appoints an auditor? I want you all to put in the chat box. Who appoints an auditor? Can the previous incumbent say no? So very good question, Dev. That Very important question that can the previous incumbent say no? Answer is we are not wanting his NOC. We don't need his NOC. We are just intimating him. So if you read the lines, a simple intimation is enough. Consent or he doesn't need to revert at all. It's just my duty to inform him that I am the new guy and that's it. So I'm intimating, not taking his consent. I don't have to wait for his reply. Also, okay. Now coming to the next point is appointing authority. Who is the appointing authority? Very simple. You have to know the types of audit that is there. So secretarial audit. So let's say the section under which audit can be done. Okay. So we are talking of financial audit. Now all this you can take a screenshot direct. I have given it to you. So firstly, audit could be done when accounting audit is being done. Balance sheet audit that they call is under section 139. Only a chartered accountant can do a balance sheet audit. Cost audit, okay, only CMA can do a cost audit, that is under section 148. Internal audit is anyone whoever the board feels is recommends or feels competent. Section 138. Secretarial audit only CS 204. And in IBC code, if an auditor is being appointed, then he has the resolution, the appointing authority will be NCLT. Will appoint the resolution professional. So very simple. If a company is going under CIRP, Corporate Insolvency Resolution Process, then NCLT will be the appointing authority. Very good. So if I just go through the sections, can you tell me again if I ask you which is section 204? 204. Which audit? 138 is which audit? 148 is which audit? 139 is which audit? Okay, so these are the different audits. So which is secretarial audit? Very simple here. Which is financial or balance sheet audit? Only chartered accountant, right? Internal audit, and we can say cost audit. Concept clear? Yes or no? Yes sir, very simple. So this is, once you know that this is the type of audit, then you will figure out that who is the appointing authority. Appointing authority. Okay, appointing authority. Obviously, again, appointing authority for section 139 differs. If you read section 139, you should know whether it is a government company or it is a non-government company. If it is a government company, then CAG will come, Cost and Auditing General of India. Otherwise, non-government company, it is very simple. Your company, the directors and the shareholders will be the appointing authority. So mostly it is your company and board of directors who are the authorities. Shareholders for government company, CAG will come in. Okay. So is the concept clear of the appointing authorities? Yes or no? Okay. And always remember section 204. Automatically you also write, see 204 is what? 204 is of Companies Act. 99.99% students will only know section 204. They will never mention listed company clause 24A, right? So this is also very important. You always remember 204, just remove the 0, 24A, right? So you are done, complete. So this is your complete knowledge. That's it. And now we'll just simply see which are the other rules. Terms and conditions of the audit, very simple. The audit fees will be mentioned. Now, in audit fees, what all is to be covered, okay? So, in audit fees will be dependent. The law will not tell you what is the fees to be charged. It is a commercial decision between the auditee and the auditor. But they will say one thing. Then what do we write? So, audit fees will be dependent on the size of the organization, type of audit, time limit, manpower involved, frequency of audit, etc. And one very important line you need to write, that the audit fees should always reflect the work performed. Mean the fees should be a fair reflection of the work performed. Very simple. Okay. And one simple little point is the audit fees. The auditor should not accept the fees which is extremely low, okay, which affects the quality of audit. Sometimes what happens, people in order to make business, they take the audit, they say okay fine, they go really low price, and then they cannot deliver quality. So they say that the auditor should not affect the quality of the audit in for deterioration or reduction of the price. Now the section with respect to remuneration is covered under section 142. Okay, that the remuneration of the auditor is covered under section 142 and is fixed at the general meeting. Very simple. Moving forward, as I told you, extremely important, which I feel they can ask in the exam. Can CSAS apply to voluntary audits, or it cannot apply to voluntary audits? So what do you mean by that? For example, internal audit, right? Internal audit is mandatory only if I meet the thresholds under section 138. If I am asking you that the company was not required to do an audit by law and still I do the audit, do I have to follow the standards? Yes or no? Do I have to follow the standards? Yes or no? The answer is very simple, that listen, if law is saying it is optional, we don't care if you don't do it. So then whether you didn't do it properly, what do we care, right? So CSAS is not applicable if for any audit which is voluntary, optional to the auditor. So internal audit will come here where they don't meet any threshold, and it is my wish, I don't do the audit also. So law cannot do anything. Common sense, you should just know the law. Okay. Now moving forward to CSAS1 is applicable on the following scenario. New audits engagement will be done. Recurring audit. Sir, what is a recurring audit? Now what happens is auditor need to be changed in how many years? Rotation of auditor is mandatory or what? So the answer is rotation of mandatory is applicable only for certain companies. Okay, for other companies not needed, and even when you are keeping for certain companies rotation, 5 years it is rotated. So if I am appointing an auditor for this year, next year I can repeat it, recur it. So it will be a recurring audit. So in such case, very simple. And the other one is most important, is what to do when someone is telling you to change the terms of the audit. So in law, they can ask you a question that the company is telling you to change the terms of the audit. Should you change? So normally students say no, but answer is that is not the case. Yes, you can change the audit provided you are not violating any of the laws. Then you can do. We'll see how it is framed. Okay. First time audit is called as new engagement, obviously. Recurring is basically when the same auditor is appointed for a subsequent period. He is covered and changes. Okay. Changes in the terms, etc. has been made. Now coming to certain definitions which students, this definition every single student knows. What is the definition of KMP? And section 2 subsection 51 defines KMP. But what students miss is what is very relevant to us, which you need to quote in the exam. Section 16(1)(d). You know what is sections regulation 16 of SEBI LODR? What is regulation 16 of SEBI LODR? It gives you definition. What did it give you? It is a definition. And section 16(1)(d) defines senior management. Sir, why is it important? Because it is written that senior management includes CS. Okay, so we are treated as a senior management, so that is why they are telling you excluding the BOD. Obviously, BOD is a different department. When I say senior department, means other than BOD who are there, like company secretaries will come here. Very important to know. Audit engagement process, they have repeated all this, that you have a pre-engagement meeting, then appoint them. Okay. A resolution has been passed. Now again, one question they can ask you, that can we appoint a auditor by resolution, by circulation? What is resolution? How you do postal ballot? Postal ballot is for Postal ballot is for general meeting, and resolution by circulation is for board meeting. Can you appoint a auditor by simple rotating? Answer is no. So section 179 tells the powers of the board should be done only by a duly convened board meeting. So shall be appointed by a resolution passed at the duly convened board meeting. So you cannot appoint by resolution by circulation. Okay, very important from MCQ point of, the situational point of view. All this, it has been done how many times? Audit engagement can be, all this is repeated. Professional misconduct, I told you, okay, is important. Is schedule 1 clause 8 you've done, even clause 9 you can remember. Sir, what is clause 9? A company secretary will be guilty of misconduct if he accepts a fees based on percentage of profits of the results of engagement. Market is important. For example, if I say that, on basis, like an example, I am accepting, this is audit, okay, but generally also they are saying on basis of the result. If I give you a clean report, you have to give me 50 lakh rupees. So what am I doing? I'm setting the fees based on result oriented. Or if I say if you win the case, you have to give me 10%. So that is again professional misconduct. Communication to the previous auditor we have done, and now they had asked, what if he says no, and what if he doesn't give? The answer is we don't care. No requirement for the auditor to secure a NOC. This intimation is required. So the word is, we just have to intimate, communicate. Written communication is not required. Right? With this, repeated everything again. Conflict of interest, very, very simple and super important. Super important. What does it mean? I told you one of the main reasons where you should reject the audit is when our independence is being affected. Our independence or our conflict of interest is there. Now, conflict of interest, if I am holding one share, can also be said that I have a conflict of interest. Okay, but and if my best friend is in the company, still they can say conflict of interest. Answer is no. The word that they have used is substantial conflict of interest. Now, how do you determine the term substantial? So let's see. So no substantial conflict of interest, okay, is there. So now this is very important. Okay, this you could say is important from exam point of view. It shall not be considered to be a substantial if the auditor is holding not more than 2% of the paid up share capital or nominal value, that is face value of rupees 50,000, whichever is lower, or 2% of the voting power. If I am not holding 50%, 50,000 face value, or 2% paid up share capital, or 2% voting power, or if I am not indebted to the guy not exceeding 5 lakh rupees and I was not in employment or more than 2. If these conditions are, all of them are fulfilled, only then I can be said that I am not in conflict. If any of the cases arise, he shall be eligible to take the audit only if he makes a disclosure in writing. So for this, if it is within limits, still disclosure is required. Disclosure is required. Concept clear? 2% voting rights, paid up capital 50 lakh rupees, 5 lakh rupees. That's it. An employment 2 years ago. So all these questions are based on that only, all the 3 thresholds. With this, I think we've covered the entire chapter. One thing is confidentiality. As a company secretary, all the communications, correspondence received are confidential and should not be divulged except for the purpose stated. Professional, you should refrain from disclosing any confidential information unless it is a legal or professional obligation. It will amount to misconduct. Normally a NDA is entered, non-disclosure agreement is signed. Okay, that is it. Now again, we had done this thing earlier. It has again come, and I have told you the concept of the changes in the terms of engagement. Should you do? So they say that listen, if the change, okay, depends, okay, may arise due to change in circumstances. So you don't have to directly jump the gun and say don't do. You have to say that it could arise due to change in circumstances, some kind of restrictions that has happened. Okay, so you have to justify and see if it is reasonable, then you can incorporate it. If it is not reasonable, incorrect, then you should reject the audit. That is important. Okay, an example has been given, and this is okay. With this, we have covered the entire chapter, including all the key sections and the provision that can come in your examination. Now we see the next part is your CSAS2. Sir, what is CSAS2? One we saw engagement, okay? It's a terms and conditions. When you're being appointed, check the other guy who appoints me. Okay, those points have been given. Okay, misconduct has been given. Professional misconduct. If I try to say that I'll given the result-oriented fees I'm charging, that is not allowed. Okay. Imagine I tell the students that I will charge the fees on basis of your result. So that is not professional, right? Now we are coming to the next chapter. Is your lesson audit process and documentation. Now very simple. Once you employ, now once I have appointed an auditor, the next step is really the process and what all documentations will be involved. So what do you think? What all will be covered in the chapter? Okay. Now, in my opinion, okay, what they should really cover in the chapter, and then we will see whether it is there or not. Okay. Now, once we appoint the auditor, then the process starts. Now, what all will be there? Okay. My question to you. So, very simple, the audit process. So, once audit engagement is signed. Once we've signed the audit engagement, okay, now we have appointed the auditor, then the process begins. Then the process begins. Can anyone tell me what is the process? So now the very first thing, a plan will be made. What will be made? A audit plan. A audit plan is a broad roadmap. It is a roadmap for the audit. For the Now, what will be there in the roadmap? Are you all with me? I am trying to explain you something overview, and then we will see everything will be covered. Clear? Sir, in changes, who holds the financial authority to change the final authority to change the auditing agent? It's the auditor. Parties, those who have signed, will only have the right. So the auditor will. So it cannot be unilaterally changed. It can only be changed through mutual consent. So that is what they are giving a guidelines to the auditor, that listen, you see that if it can still the audit be worked as per law, if it can be worked, then amend the laws, because there can be changes in regulatory environment, there can be changes in business environment, there can be changes anywhere. So in that case, you might have to change the terms. Now coming to the audit plan. Sir, in audit plan, what happens? It's a roadmap for the audit. So here, first as an auditor, I will try to understand the business in which the company is operating. Okay, I will try to understand which all companies are there, which all entities are there, which all laws applicable, okay, laws applicable, or remote is there, no? Laws applicable. Then what else I'll try to understand? I'll try to understand there is something called as risk management. Because see, in an audit, depending on the type of audit, risk can be involved. A real estate company could have that there is a black component there that is there, or a pharmaceutical company, mostly cash oriented business. So though they are loss making, but on reality they are making huge profits. Then comes next is the materiality. Extremely important. I don't know whether you all know the meaning or no. Materiality is that financial limit where the opinion of the auditor will change. For example, in your examination, 50 is passing, 49 average is considered fail. So materiality figure is 50. That means, how do you define it? That it is that threshold, that financial threshold, where the readers of the financial statement will change their opinion. Where the ones who are relying on this financial statement will change their opinion. For example, if I see 50, I will say pass. If I say 49, I will say fail. So what am I literally doing? I'm changing my opinion on basis of some financial threshold. That financial threshold has to be fixed by the auditor. It is a duty of the auditor. He will fix that. Listen, I feel that for this size of company, this should be the materiality. So these are important aspects that you will say. Then you will say that when the timeline for the audit, by when it will get over. Then comes a more detailed structure called as a audit program. Okay, the audit program will be more detailed. It will be detailed and team specific. Means they will tell that this staff. So now they will talk about audit collection, audit evidence, audit evidence. Okay. Now audit evidence, let's say in my team, audit team, in my audit team, I have 4 people. How many people I have? May A, B, C and D, and I'm sending them all to collect evidence. So this I can tell that you check the vouchers. This I can tell you can do a verification of the assets, where you do a physical verification of the assets. Go to the godown, check whether it is there. Third, I can say you speak to third party. Okay, third party, that is call customers, suppliers, etc. See whether they are genuine. Fourth, in this I could take certain kind of confirmation from banks, that they give me that yes, there is this much cash balance in the bank. So these are different modes of audit collection. So in the audit program, how the evidence will be collected, the ownership, whose responsibility it will be there, and when in the end, by when the audit will get over, timeline details will be given. Concept clear? Let's start. Now the concept is done. I've covered the entire part of audit process, and in the end the opinion will be given. Now again, what do they say? Audit evidence should be sufficient quantity and appropriate quality. For audit evidence, very simple, you require quality as well as quantity. Means just by picking up one voucher, if I give an answer, it doesn't make sense. I require sufficient proof to give my opinion. And that sufficient proof should also be on quality basis. So sufficient quantity should be there and appropriate quality of audit evidence is required. Now again, we've told what is the objective. I've told you again, sufficient and okay, sufficient should be there and evidence should be collected properly. Very simple. Let's move ahead. Now I told you about evidence. Audit evidence is the on basis of which the opinion will be given is called as audit evidence. It is based all the collection of the facts on which the opinion will be given is called as audit evidence. Now audit documents is working papers and audit file, which I'll come to it, but let's finish the audit evidence part. What is the audit? As I told you, first is planning. Audit plan will be made, materiality will be made, risk aspects will be written, team configuration will be filled. Execution. In execution, you collect the evidence. In the end, you give the opinion, that is called as the audit report. This is another CAAS 3. Okay, so this is audit opinion CAAS 3. Now we are just sticking to the CAAS 2 process. Okay, we are just sticking to CAAS. Okay, moving forward. Audit plan. So audit plan is the roadmap or the outline of which will be followed. The objective of having a proper plan so that the audit can be conducted effectively and efficiently. So some keywords you need to learn, and that's how you should start. And you can see that I'm highlighting keywords. The objective I'm highlighting keywords is because that is what you need to write, right? The audit plan is a structured outline of the scope of the audit, type of audit, timing of the audit, procedures, so that the audit can be conducted efficiently and effectively. So writing like that really helps. Now again, one very important line, you will always see this. Okay, substantive and system based approach. See, substantive approach means a detailed checking. Okay, detailed checking. And system based means the internal controls, you are verifying whether it is strong or no. I'll tell you what is important from your audit planning. What are the benefits of having a plan? You can write that. Everything is documented. Accountability can be set. Developing a plan. Before making a plan, you need to do background research about the company. Extremely important. Okay. They use this word very repeatedly, and you also need to know professional skepticism. So, professional skepticism is an important characteristics feature of an auditor. So, what does professional skepticism mean? So, every time the auditor is like a police officer. He cannot just trust everyone's statement. He should have a questioning mind. Audit skepticism means questioning mindset about critical aspects of the audit. It will help you improve your effectiveness and reduce the risk. So every time doubting everything is good. Okay, then comes risk assessment. Depending on the business, the risk is determined. Now, three kinds of risk is there. Okay, audit has risk, could be three. One is detection risk, that the auditor could not detect the error. That is his problem, his mistake. So what is audit detection risk? Detection risk is the risk that a substantive audit procedure was not detected a misstatement. So in spite of detailed checking, it is always possible that we might miss a material aspect. Now coming to the next one is audit control risk. Now whenever they say the word control, they are talking of internal control. So what do you mean by internal control? Every policy, process, program, rule made by the company to control its internal framework. So if I try to ensure that I have proper control over my employees, they are functioning, that is called as a control risk. So it is possible that my internal controls cannot detect it. For example, I don't have CCTV cameras. I have a watchman. Okay, I just have a watchman or staff to look after. So because of that, my staff, it is possible that he might have missed out something. So that is a control risk. So not having the internal controls, not being able to detect the errors, are called as control risk. So if your internal controls are weak, so nowadays you have CCTV cameras, so your internal controls are strong. Inherent risk is the concept of audit. Is that inherent means by default, it is possible that an auditor will make a mistake. So inherent risk is basically a misstatement that could be material, okay, assuming that there was no related internal controls. Thus, vulnerability of a class of transaction or a misstatement that could be material. Okay. Genuineness of a related party transaction. If a company enters into frequent related party transactions without adequate documentation, higher chance that those transactions might be misstated. So let's say, what is inherent risk trying to say? That if company does not have internal controls, assuming that there were no internal controls, so related party transactions were being entered, okay, without proper documentation. So since the internal control only never told that a procedure to be maintained, so that is why there is always a risk that there could be misstatement, right? So inherent risk comes when there is no internal controls, right? Control risk is when your internal controls are failing, and detection risk is after everything, even doing everything, you can still miss out. Okay. Then comes materiality and audit risk. Now, very important. We'll come to the concept of materiality. Till then, this is about information about the auditee checklist. Very simple. All this is simple. Collection of auditing. I have told you all the different kinds of staff manpower. One could be sent for invoicing. One could be testing the internal control. One could be told make third party confirmation. One could be ratio analysis. Unusual fluctuation should be flagged. Unusual risk should be flagged. Third party confirmation, as I told you, bank telling that yes, I have XYZ cash balance with me. That's a third party confirmation. Analysis of audit evidence. Done. So chapter repeats a lot. Now we come to the next part, which is called as the audit process we have completed. Audit process we have completed. Materiality, as I told you, 49 is fail and 50 is pass. So materiality could be defined as the threshold on which the readers of the financial statement will change their opinion. Okay. The higher the materiality, the lower is the audit risk. Okay. So the more, just remember this, that the more seriousness you show in materiality, the lesser will be the audit risk. That's how you have to remember. So the lower seriousness, lower materiality means higher audit risk. That is how you have to remember. Now coming to documentation. Now documentation in all the documentation in audit is called as working paper. Sir, what do you mean by working papers? The auditors, whatever work they perform is contained in their working papers. So this collectively is called as audit file. All the working papers are filed and then it's called as an audit file. Now what is a working paper? A working paper is all work performed by auditor is called, all work performed by the auditor is called as working papers. Collectively it is called as audit file. Now imagine so much of invoices must have collected, so much of third party confirmation must be taken, so much research work for a ratio analysis must be done. So then they maintain a file. Now this file is divided in two parts. Permanent file. Now it is just about segregation of the documents properly. Audit file could be a temporary file or could be a permanent file. Permanent file, so all the documents that I have, I will segregate it. This will be the important documents, would be put in the permanent file, and temporary file could be put in the other file. Okay, other file, it would be called as temporary file. Now why it is important? Because it can be used in subsequent audits as well. Okay, for example, a MOA, AOA, any kind of lease documents, loan documents, etc. Now all this is going to be used in next year also, so better to have it in a separate file altogether. And let's say if a sales invoice is there, sales or purchase invoice is there. Now it is not that important, right? sales or purchase invoice not important, so I can use it in the next year also. So I don't need it in next year, so I'll keep it in a separate file. I'm not throwing any of that. I'm just segregating important and non-important. That's it. Let's complete it and finish it. They say audit should be or is the work. From here it can be taken as evidence in court whether the auditor has performed well or no, his job properly. Second, it is kept with, it is in custody of the auditors only. Okay. It collects all the audit plan, audit program, audit evidence, everything is covered. Okay. And one of the qualities of the audit documents is that it should be clear to understand, it should be concise, it should be well written, well organized, well maintained. Okay. Where a new auditor should be able to understand the key findings. Right. And one last part is very important, audit documentation. It should be complete, concise, neat, easy referencing should be given, proper numbering should be given, page numbers, etc. Relevant, ease of review and used in subsequent years. I told you audit file, audit documentation could be in a static or current. Okay. Static means it could be largely unchanged, MOA, AOA. So your permanent file, they are calling it static and non-static. Current is only for the current year. With this, we have covered the entire chapter for audit process and documentation. Thank you. So CAAS 2 also we have completed. No points for guessing what will be CAAS 3. Sir, what will be CAAS 3? Now, obviously, we did audit engagement is 1. Process of collecting the information is in CAAS 2, evidence gathering, and on basis of the evidence the opinion will be given, and how and what kind of opinion is to be given is in CAAS 3. Concept clear, yes or no? CAAS. Now CAAS 3 really says that there are 2 kinds of audit opinion. How many kinds of audit opinions are there? I wanted to take a screenshot, just a sec. How many kinds of opinions are there? So there are only 2 kinds of audit opinions, okay, and then subdivision is there. So one is called as unmodified and the other one is called as modified opinion. So what do you mean by the audit opinion? Is the decision or opinion, okay, of auditor on basis of evidence collected. So what do you mean by audit opinion? Audit opinion means the opinion, the decision of the auditor on base of the evidence collected. Clean report. Sir, what do you mean by clean report? Absolutely perfect, no issues. So a clean report, now how do you define it? Unmodified means no issue. Just remember the word no. Modified means issue. Modified means issue. So there are no issues. So a clean report is the company. Now very important, students cannot define only what is an unmodified opinion. They know that it is a clean report, but they don't know anything further. So when you say clean means what? All the statements are correct. It gives a fair, true and fair view of the financial statements give a true and fair view of the company's financial statements. It is free from misstatements. That's how you have to state it. Modified. Whenever there is an issue, there can be 3 kinds of issues. How many issues? Part 1, Part 2, Part 3. If the auditor is saying, I don't know, IDK, I don't know. The auditor is unable to form an opinion because evidence was not given or he didn't get access, okay, to the information. So he's saying, I cannot, if I didn't get access to the books of accounts, I can't say whether it is good or bad. Qualified opinion means it is a okay report. That means the company is free from misstatement subject to. So the word subject to will come. What is the meaning subject to? That the company has complied with the law subject to the related party transaction mentioned below. One issue is there that they will write. adverse effect will be always written in exact opposite as you write a unmodified opinion. So here you will say that the company does not give the financial statement don't give a true and fair view of the financial position. Glaring misrepresentations or misstatements are there. Okay, so this means it is a horrible company. That it is a negative opinion, negative or a fraud company. Clear till here? So modified has three categories. Whether only one issue is there subject to, or disclaimer of an opinion that the auditor could not frame an opinion due to lack of information. Or the third one is glaring misstatements are present in the company. Very, very simple. All that is done. Now, audit opinion. Now, what do you mean by the audit opinion? Audit opinion is a view of the auditor, right? Now all the points. Now CAAS 3 is covered. Now forms of audit opinion. Now whenever they ask you a question, you can always interlink it with CAAS 2, that on basis of the evidence the CAAS 3 is given. Now unqualified. Now see how they are giving the answer. Unqualified means, what did I tell you? Unqualified means no issue. Where the auditor concludes that the affairs of the company are free from misstatement and they have complied with the law and they give a true and fair view of the company's financial state. Very, very simple. I had already told all this. Okay, adhere to the law. When you see this, unmodified means no problem. All the records are in place, etc. Okay. Now you see for the all the compliance timelines were followed. Okay, everything is done. Now modified means there are misstatements, but not to the extent to give it a adverse opinion. That is what you will write. And all the opinions auditor it will be attached to the board report under section 134 subsection 3, and the BOD have to mandatorily respond to it. Okay, they have to mandatorily respond to it. So again, let's see to what is important. Qualified adverse disclaimer. Again, I have told you all this. Same thing they will repeat. Okay. Disclaimer of an opinion means he's disclaiming. He's saying I can't give opinion. A disclaimer of an opinion is unable to obtain a sufficient and appropriate audit evidence. This could be due to non-cooperation of the management, missing documentation, or inaccessibility of records. A disclaimer of an opinion is considered not considered as an opinion in itself. When an auditor expresses a modified opinion, he will have to write it in italics. Now, very, very important. Many students miss writing this. Okay, that in our opinion, because of the significance of the matter, describe the basis for modified opinion. We do not express our opinion due to the following matter. So we do not express, they will have to tell. And they will write in the heading, basis for disclaimer of opinion. So you also have to tell why you are disclaiming or why you are not able to give the. Now coming to another aspect which has been a past exam question also and very important. Emphasis of matter. Now emphasis of matter is a fact on which the auditor wants the reader to see. It is not that I am telling anything bad or good or anything. I am just telling that you have to see this is something important happening, and it starts with emphasis of matter. So emphasis of matter is basically when the auditor wants the attention of the reader on certain things which could be positive or negative. For example, the company's sales has been considerably falling. If it continues, they might reach bankruptcy. So they call it as they have a very short runway. Okay, certain funded companies which run on losses, they have a very short runway. So that is what they can tell, that maybe if this trend continues, they will be bankrupt in the next 1 year. So emphasis of matter is basically could be a positive aspect also, that the company is growing really well, or maybe emphasis of matter could be a litigation has come, a new accounting standard has come, company needs to adopt a new technology. changes in legal and business environment. For example, due to COVID, the physical businesses and cash businesses are hit. This needs to be kept in mind, etc. Okay. Then disclosure responsibility, such the all, as I told you, even this will be attached to the board report and it will be mentioned. Now come to concept of materiality, which I have already explained. Materiality is basically importance or significance of an amount. As I told, a threshold, importance of an amount, where the readers of the financial statements will change their opinion. It's a matter of professional judgment. Okay, it has an inverse relationship. As I told you, materiality, just think it as seriousness. If seriousness is high, audit risk will be low, and vice versa. Okay, principles to be followed by the auditor. It should be complete, objective, timeless, and contradictory process. So you can read complete. Now again, process of forming an opinion: complete, objectiveness, contradictory process, and timelines. So again, when I say objectivity, means what? He should have principles of completeness, that he should have gained sufficient evidence to give his opinion. Principles of objectivity means the auditor should not have just blindly relied. He should have applied professional skepticism. Threats to your independence could be self-interest. If I have invested in the company, now all this is mitigated due to the rules that we have, that he cannot be materially connected. Self-interest, self-threat, advocacy threat. If I had only given the advice to the company and now I am only appointed as an auditor, if I already know them through any means, or I am getting intimidated by the management. So headings you can do, but today all this has been countered by law. Okay, by ensuring that independence is there. Because if that is not there, then it will be a threat to the judgment. Limitations. So, audit authority, if they are imposing any limitation on the scope of audit. Now, similarly, we had said when an auditor is making when the company is wanting you to make certain changes, here what are we doing? Auditor is trying to limit the scope. So we should again see whether it is required, not required, okay, and then pass the allow the limitation. If he feels that it is being limited within the law, then he should reject it or give a adverse opinion with regarding the company. A third party report, as I told you, if now understand, due to geographical constraint, I cannot go abroad, or due to expert view, I can auditor can take opinion of a expert. For example, if to check whether they are fake or real diamonds in stock and trade. Now what happens? I have to go and see the go down. In the go down, I can see all the diamonds. But now I want an expert opinion to tell me whether they are real diamonds or no. So a third party opinions are not directly connected with the audit, but their opinion will be attached and the auditor can rely on opinions. Maybe if it could be another area, okay, and I cannot approach there, I can hire a consultant, or I can hire a CA from another country. So those can be done. That is about third party reliance. Management representation letter. Now what happened is, certain things the auditor cannot counter check every document. The auditor also, if you go to see, is a human. They also have time constraint. They will also check some things and they will rely on something. Whenever they are relying on information shared by the management, they will take a management representation letter that all the information submitted by them are true. Okay, so auditor may obtain a letter from the auditee which he is not capable of direct verification, or it is not feasible to take a direct verification. That time it is very normal for the BOD to issue them a verification letter. This can be used as a part of audit evidence, that listen, this guy said that all the contracts are genuine and as per law. So we will move ahead. And that is it. We've covered with the entire chapter. Okay, that's it. Now we go to the fourth one, that is your secretarial audit. Now we're going to the fourth and the last part of your chapter. Now in this I will be telling you some things here. What they ask, how many audits can you do, is important. Which are the sections? Normal 204 and rule 9 everybody writes, but people miss out 24A. So we'll be writing all of that and completing it. See. So all the laws that you need to know, I have written it down here. All the laws that you need to know, I have written it down here. So first, CAAS 4 is about secretarial audit. Section 204, rule read with rule 9 is covered, where they say when secretarial audit is needed. Who is the appointing authority for a secretarial auditor? Who appoints us? Company or board of directors? I want you to put in the chat box. Do company secretaries are appointed by BOD or shareholders? Then your regulation 24A and all this, as I told you, is always formed a part of the board report. And in secretarial audit, we check about the non-financial aspect, about all the laws, appliance to the laws, and we check whether the laws are followed in letters and in true spirit or not. Okay. 24A talks about secretarial audit and annual secretarial compliance report. Now, annual secretarial compliance report comes from SEBI laws. From where it comes? All the SEBI laws. So, section regulation 24A of SEBI laws talks about secretarial audit and ASCR, annual secretarial compliance report. So, what is that? It is all the laws relating to SEBI, whether you have followed or not. This would obviously come in case of listed companies, SEBI LODR. Okay. Now, when you go to see your section 204, now we know how important section 204 is. So it's equally important that you also know the subsections. 204 talks about eligibility. Then that who is required to do a secretarial audit. So it is 50 to 50, 100. Do you know the thresholds? 50 to 50, 100. Paid up capital, turnover and loan amount. 50 to 50, 100. Paid up capital, turnover, loan amount. If this threshold is there, secretarial audit is needed. Then assistance is to be given to us. It will attach to the board report, and if you not complied, it will be a penalty. So we can definitely write with the subsections also. Why everyone is writing 204? We'll write the subsections also. Very simple. Let's see. Then and just basic stuff. Let's come to the main. 201. Sir, I already told 201 is about who requires a secretarial audit to be done. So every single company which has a paid up capital of 50 or turnover of 250 or a loan amount of 100 crores need to get a secretarial audit done. The secretarial audit report will be in MR3. It will be in MR3. Simple. Okay. Every listed company and every public company having 50, every public company having 250, and every company having a loan amount of 100 or more. So you can just read between the lines, take a screenshot. Very, very important. Assistance is to be given. Company should give assistance to all the CS. Disclosure in the board report and penalty amount. Clear till here? Now even a private company which is a subsidiary of a public company is also deemed public, that we know. Okay. Now again, do I need to follow the standards if I am opting for secretarial audit voluntarily? Obviously, for voluntarily, when law is saying you do or you don't do, we don't care. So whether you did it properly or you didn't do properly, that also we don't care. So for companies are not covered under section 204 can adopt this voluntarily, but no, CAAS 4 is not required to be followed mandatorily. Clear? Now need, you can write the need of compliance with the laws. This is very basic. Risk management tool, preventer of fraud, and ensuring that the transactions are in place. So this is the importance and benefits of, it's a good corporate governance. So you can have one answer on the need of secretarial audit, the benefits of secretarial audit, the scope of secretarial audit, all will have the same points. That it is a best management practice. You'll see here, it is compliance with the laws, it helps you monitor the activities, it helps you become efficient and effective, it appoints decision making, improves, strengthens the internal control, verify. So just basic stuff. Okay. Now when you come to this 24A, I have already told you again and again. Okay. 24A says about all the CS laws have to be complied. Rule 24A. Now by when you need to do. Very, very important. Okay. So study it by heart. I want you to quote it in the exam. Okay. Okay. So the very first one is that if you come here, very important. I don't know whether you've written or no. That as per Kotak committee, critical role of secretarial functions, secretarial audit may is mandatory for all listed companies, and that has been extended to materially unlisted subsidiaries also. Okay, materially unlisted subsidiaries. Now, when you say materially means what, sir? So it could be an unlisted company which is material to the entire group, because here the threshold is different. Pay attention that a material subsidiary refers to a subsidiary whose income or net worth exceeds 10% of the group, consolidated group. 10%. So basically, secretarial audit is needed of not only the listed company but also. So section rule regulation 24A says that every listed company and its materially unlisted subsidiary are required to get a secretarial audit done, and they also materially is 10%. You have to remember the threshold. And for 24A, one more point they have added, that even a report called as annual secretarial compliance report, which is SEBI specific, that also has to be done within 60 days from the end of financial year. So secretarial audit and ASCR is to be done within 60 days from the end of the financial year. Simple. Now coming to exemption, that regulation 24A, that is secretarial audit, is not required for two entities. Really small SME companies. So it doesn't apply to any company which is on the SME board. And if you see who are there on the SME board whose net worth is not exceeding 25 crores or paid up capital is max 10 crores. So this also point you can remember, that secretarial audit is not needed if it is a small and medium enterprise, and if you see their net worth is maximum 25 crores or their paid up capital is maximum 10 crores. So these two figures have been given which you need to know. Entities having paid up capital not exceeding 10 crores or net worth not exceeding 25 crores are exempt from the taking a secretarial audit. So bad for us that you don't have to do. Okay. And even the SME exchange. So similar thing, they are exempted. CAAS 4, now they will repeat everything, is not mandatory. I told you for voluntary audits also it is not mandatory. This we have already done. Voluntary audits are excluded. CAAS 1, 2, 3, 4, all we have done in depth. Concept, already we know the benefits, risk involved, advantages, same point. So now risk of secretarial auditor. Now normally penalty clause is never important. Penalty clause is never important. But for this part, penalty clause is also important. Okay, because what happens, section 204 subsection 4 says that we can be liable to penalty of 2 lakh rupees. Then also you have to read section 447, 448, mandatory repeated in multiple places. So in 448 says that if you give any company secretary or any professional who is auditor makes a false statement knowing to be false, or makes a material omission knowing it to be material, will be penalized. And what is the penalty that has been given? That also you need to learn. Repeated offenses, 3 years imprisonment. Okay, professional misconduct, all this you can remember. Code of conduct, integrity, that's a soft skill. Ethical behavior, all this you need to have. So overview is sufficient. Scope of secretarial audit, every single law applicable to the company needs to be followed. So you don't need to read like that, everything is there. And then the process is very simple. Similar that your auditor is appointed, he will talk to the earlier incumbent, just like he'll accept the appointment and do the audit process, that is evidence part, and in the end he will give the working papers and his opinion, and he has to comply with the auditing standards as given in CAAS 4. Okay. Done. I think this is the major part of the chapter. I think we have covered. And the MR3 format, that is the reporting will be done in MR3. With this, I have completed all your 4 CAAS 1, 2, 3. The balance part of the chapters, we will do it tomorrow, where we will do legal due diligence and some parts of part 2 or part A. So with this, I conclude my marathon covering some of the most important parts of your part B, that is all your CAAS 1 to 4, including telling you what is the important aspect that you need to remember from exam point of view. The balance part, we will do it in tomorrow's lecture. Thank you so much guys for your lecture or for your patience, and don't forget to like the video and share it with your friends as well. Okay, this is the request to, for me, that you all will do for me. And also don't forget the dream batch will be announced very soon, so don't forget to enroll for that as well. Take care, good luck, and do write the test series given free of cost for all of you all. Take care guys, bye. Thank you so much. Dave, great to have you all. Thank you so much guys. See you all tomorrow.